Our content is intended to be used and must be used for informational purposes only. It is very important to do your own research analysis before making any investment based on your personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our website or podcast and wish to rely upon, whether for the purpose of making an investment decision or otherwise. What's up, my future one percenters? This is Marathon Money, brought to you by Wincrease.com. I'm Cam Jones, Prince of the Stock Market, and I'm here with Jaron. What's up, man?
Hey, what's going on?
Chilling, you know. So before we get into your favorite topic of Tesla, let's roll into market recap this past week. I want to run something by you, right? Because I know you like a chart guru, and so I noticed something on all the major indexes like the Nasdaq and S&P, the Dow. One thing I noticed is if you look on the yearly chart, the daily yearly chart, right, and you have the 20-day moving average on, I've noticed that the prices do not like to go too far above or below the 20-day moving average. And I want to see if that's something that you have noticed, or if you pay attention to, or anything like that.
I mean, I mostly just stick with the 50 and the 200 day, so I haven't really looked at the 20 day. But I mean, one thing I've always learned and noticed is, I mean, in different patterns and different situations, like you can pull up, if you pull up like and actually like look around and do some different technical analysis, like 20 day or like MACD or different things. They tend to sometimes stick to different ones at different times. So like, yeah, that'd be something I'd like to look at actually then. Like that's a good catch then.
Yeah, like I'm looking at the NDX, and right now it's obviously, it's bullish, so it's above the 20-day. But it's really hard for it to go below the 20-day. Like it does, but it does not. It always hugs that 20-day, and then when it goes too far above the 20-day, it usually comes down. If it goes too far below the 20-day, it usually goes up. And if that pattern, well, from what I'm looking at, the pattern is consistent. So, right now it's very close to the 20-day. It tried to hit the 20-day, but it did not stay there. Kind of bounced up off of it. So right now I feel like it's in between. Like, it can go below it or above it. But I guess what I'm trying to say is, next time that I see it go way above it, I'm going to grab some puts. And next time I see it go way below it, I'm going to grab some calls. Like, not even in the money calls. I'm talking about out the money lotto. You know what I'm saying?
Right. I mean, like I remember a while ago, I forgot, some guy told me, but basically like whatever patterns you find, like it works until it doesn't.
Right.
So like if the 20-day works, like, and if it keeps working, then it works. Like basically, and that's one thing I've been trying to work into my rules and discipline too, is like if you can find some kind of pattern and it's working, like just let it work until it fails.
Right.
So like I think that's solid whenever you can find something like that.
Yo, and that kind of falls into our main topic today, which is we're going to talk about common mistakes young investors make. But before we get into that, I need your opinion on your boy's Tesla, man. What in the world happened this past week?
I mean, if he wants to take the company private at 420, I think the valuation was like $70 billion or something. But we talked about it around the office a lot. But I mean, honestly, I think it's a good move. It's something that I think the company is better off with. But at the same time, like going back to my original theory, basically it seems like he went into the market, and basically marketed that company for 4 or 5 years or whatever. Sold a whole bunch of shares in the secondary, collected a whole bunch of money. Now he doesn't need it anymore. The valuation's already way higher than he ever would have thought it would have been. So now now it's like, all right, let's just take it private,
Cash out. But
cash
ain't that
out.
smart
Like,
though?
I mean, it is smart, but at the same time, it's still what I believe a Ponzi scheme is.
You're actually right because I don't think that I like people using Twitter as a platform, whether it's political or whatever. You know what I'm saying? I just feel like that's the new way to get information out,
Right.
similar to like TV when it came out in the 50s or whatever. They started
Exactly.
doing that. But you can't. I feel like, man, that's messed up. If he just said that out of nowhere and he didn't have the money to actually do it, I feel like there should be consequences to that. You know what I'm saying?
Exactly. Like, even if, I mean, it's like, and that should have to be checked. Like, they should have to like actually verify that he. I mean, one thing I'll say is when we was talking about it in the office is like, all right, so say the evaluation is like we'll say 75 billion, but I mean they don't need 75 billion because you think about it, they don't have to buy Elon's share, so that's 20% of that they don't have to buy. And then I'm sure they can do some kind of modeling to see like the actual projection of shareholders that would actually want to be bought. So for all we know, like, I mean, I know Tesla has a lot of like big longer term shareholders. So if 50% of the shareholders are people who aren't going to sell it, and when they go to private, then they only really need 35 billion. So I mean, there is that part that could be working for them, but at the same time, I still think that's like general securities fraud to go out into Twitter and basically put a tender offer on Twitter, and that drives the stock up.
What
And especially if you don't have the funding.
what is what's if someone didn't what would happen if someone did not want to sell their shares though?
So it sounds like, I guess the same thing they did with SpaceX. So like how they're gonna hold the company is not like a regular private company. It's kind of like a private company with public shareholders, if like kind of. So like if you don't sell, you just own like a proportionate percentage of private Tesla
Mm-hmm.
in the same kind of way that you own the public, own it in the actual stock market, but you just own it part of the private company. So that's what it seems like, because he did make the point of, if you don't want to sell, then I'm okay with that. But I mean, here's the main thing that really is why I think this is the biggest red flag, is because he literally said, I think the company's better off private. Then he acknowledged the shorts and the negativity, but like any good CEO knows that shorts are a good thing for your stock, because when you actually perform and the stock, the company does good, it helps drive the stock up when people have to cover.
Mm-hmm.
So like, and when you prove shorts wrong, it's even better. But it sounds like to me like the shorts, like he's basically crying, guilty. I mean, that's just what I'm seeing. That's why, like I said, I think the corporate Tesla Corporation is a Ponzi scheme.
Okay, so what is why would he do it at 420 if the stock price at the time was like 350? Why wouldn't he do it at like 380 or something? Why 420?
I think he just
Threw something out there.
50% threw something out there. 50%, wants to say, I think my stock is worth so much more than it is now. So,
Mm-hmm.
you know what I'm saying? At least, like, if he would have said, I'll buy it at the current price, and it's like, well, you don't even value it that much then, if yourself, if you ain't even willing to put a premium on it. So I think he's just, yeah, I think he was just Elon being Elon.
I got you. I got you. So what's your projection on this stock, man? Realistic projection.
I mean, I honestly am like bankruptcy. I mean, I like I said, I think that it'll come to a point finally, if it stays public, that the SEC or whoever or the FTC will find the company guilty of being a Ponzi scheme, and then they'll auction off the assets, and then someone like a Apple or someone will buy it and then turn it into, continue it as a legitimate company.
You putting them,
Like, I,
you
you know
putting
what I'm
them
saying?
in the category of an Enron though.
I am.
So,
I'm putting, but see, the difference is though, I'm not putting the company in that category. I'm putting like the corporation, because like I said, I think the technology and all that stuff is there. I think that's all legitimate. I think it's a good product. I just think that the underlying corporation that's being used for stock is a Ponzi scheme.
oh man, so you saying Tesla gonna just be like Radio Shack, man? They gonna be like,
Oh man.
just they gonna be like Sonic losing the coins.
Yeah, I'm telling you, that's what I think. I really think that, like, but I mean, like I said, I want a Tesla for myself, but I just don't want Tesla stock for myself.
I got you. I got you. So that's
Yeah,
that's interesting, man. Now, me, I don't think they're a Ponzi scheme. I do think that they're overvalued, but I think that they're overvalued to the extent of my knowledge about the company. What I mean is, we don't know all the different things Tesla has planned. If they could pull off that underground tunnel or whatever they're trying to do, if they could, obviously they're the leader in car batteries. If the other car companies, I know Jaguar is about to come out with a 90 kilowatt vehicle. If and also the Bolt. Let's say all these companies like, man, let's roll with Tesla's batteries instead of whoever. Obviously
oh
that drives up the stock, or that makes it more valuable. So I think, from what I know right now, not really being a Tesla insider or knowing, whatever they have in store, just cars and yeah, basically just cars. No, they're not worth what they're worth
right.
right now, but potentially, I think the potential, they could be, one of the most valuable companies in the world.
Yeah, I mean, and we were talking about the office too, that if you really think about it, the only reason Tesla's, cars are so popular is because they made a sleek looking EV car. Like, and I think that's what's wrong with Ford and Chevy. They made these ugly electric cars because they're like, oh, like, cars of the future, like smart cars. But it's like, no, people just want
Just want a regular
that
car, man.
same,
Yeah.
yeah, they want that same Mustang body or Focus body or, Chevy Malibu body. Just put
Put a
the
battery in it.
electric drivetrain
Yeah.
in and take out the gas one.
Right.
And I think that's where they missed the boat. But I mean, like BMW and Mercedes, that's what they're doing. So they are like, the European car makers are making nice looking electric cars. They're just more on the higher end,
I got you.
premium cars.
I got you, man. That's an interesting take, man. And you're well documented Tesla hater.
I'm fine with that. I promise you.
Tesla
I am
stock
fine with
hater,
that.
I guess. But sometimes, man, you're usually right, though. I have
I
to say.
mean, at least on the news side, like I said, but you got to separate that stock in that company, because the company will have all this bad news and like say do things that I say is wrong, but the stock will keep working because people just keep buying.
Right.
So
Exactly.
that's why, like, I'm scared to short it, to be honest. I mean, like I'd short the company, but like if I could like bet against like the legitimacy of the company, I'd do that. But the stock, that's just like rolling dice.
Right. So, let's roll right into common mistakes that young investors make.
Yeah,
And
I'm the expert in that.
well, I want to start us off because I think what I'm going to start us off with might spark a different conversation between me and you, and it probably will make some people mad that's listening to this, right? So, so the number one thing for me that I feel like young investors make is expenses, having too many expenses. Now, I know what you're saying. You probably like, yo, why would you get mad at that, right? Well, there's a specific expense that, or did I say specific or specific? Whatever.
Specific.
Specific expense that you don't want to get into. That's having kids too early.
Yeah, I'm with you on that.
So
I'm not gonna lie to you.
if you have a kid, a kid is a super expense, right? So
Definitely.
some people, they having kids at like 19 or whatever. Well, there goes your, retirement. Yeah, I mean
Right.
it's not like completely over, but all of your
Yeah,
extra
for sure.
money, unless you're Kylie Jenner, you know what I'm saying? You you don't have any money to invest anymore, especially pay, if you got to pay, 2K, $2,000 in child or not child support, my bad.
Daycare.
Daycare, I mean, daycare, you paying
Yeah.
2K a month of daycare. Now let's say, somebody out there might be like, well, I got a good job. You know what I'm saying? I can take care of my kids. Fine. Yeah, that's cool. You still blowing 2K a month on
Right. Yeah, that's
daycare.
still that's just one of the
It's
expenses.
just one of the expenses, on top of, the many other ones. And the thing that I feel like young investors should try to do is not invest every penny, but keep your expenses low so you can invest, something freely, a
Right.
couple $100 a month, maybe $1,000 a month. And maybe you
Yeah.
can do that even with a kid. But what I'm trying to say is without one early, you got that extra whatever you spend it on the kid, that's
Yeah.
going
Right.
back to
Yeah.
your account and it's growing and things like that. While you're also taking time to mature as a person to be able to even raise a kid the right way. You know what I'm saying?
Yeah. I mean, I believe the exact same thing. I mean, like I'm the kind of person, like I said, I wanted to have, like I'm only 22 now, but I don't want to wait till like I'm older to have kids, but I don't want to have kids, right now. Like I want to get my career settled and and I want to get into real estate, all those things. So it's like, I think it's good to at least get a, solid base before you have kids basically. And like, I mean, it depends. I think everyone's different though. So like some people might not, like at the end of the day, some people might not care about investing or all the other stuff. So they're like, well, I'll just have kids 'cause I want kids. I mean, I don't care nothing else with the money. So, but I mean, like, but you said like on the side of investors, like, yeah, I mean, it's like if you can avoid a $50,000 a year expense, then you should probably do it
Yeah,
because
the
that's
easy
50
way to
grand you could
avoid
be
it, man,
investing.
is to, start running up in it raw, you know. Make sure you strap up, you know what I'm saying? Strap up. Or else you're gonna be paying that $2,000 daycare bill on top of everything else that come through. But nah, man, on the real, that I think that's the biggest expense. And I say it, man, I'm gonna be real. That's the biggest mistake you could
Yeah,
possibly make.
I mean, well, my biggest mistake that I was thinking was and it's like it's kind of like a mistake you can't avoid, but like I wish I would have started earlier investing. Like even though I started in high school, which is way before most people, I still wish I would have started even earlier because I hear you hear about people starting when they're 7, 8 years old,
Mm-hmm.
and their parents teach them and stuff like that. So like I think the earlier the better. And like at the end of the day, I mean it's an unavoidable mistake, but it's like the earlier you can start, always the better.
Yeah, I agree with you right there. And basically, as a child, right, you're limited to like your parents' knowledge of what your parents will teach you at that age, right? So you know, and I don't think that that's wrong that a parent isn't pushing investing on a 6 or 7 year old. I'm not saying that's wrong.
Right.
I think that's perfectly fine if you're not. But I recognize what basically you just said. And so my nieces, when they were about 5 years old, uh, both of them, I started buying them stock. Actually, I I'm kind of mad about what I did right here, but I gave them like 20 shares each of my early Teledoc shares.
Oh
I'm
wow.
like, man, I should
They
take those
eating
back.
on
You know
that.
what I'm saying? I gave them like $10 Teledoc shares, man. Like,
Oh, for real? Oh yeah, they cooking on that.
I mean, that's not a
Yeah,
lot, but you know what I'm saying? It
it's decent now.
yeah, it's pretty, it's okay now. And I gave them,
Yeah.
and now what I do now that they're older, I try to teach them like, hey, look at some of these companies you like and see what you want and let me know. And then, for your birthday, instead of buying toys, I'll buy you some stock. They
Yeah,
starting to get a
that's
little ridiculous. They asking for Netflix and Apple.
yeah. Uh,
But I agree with you, man. I agree. The earlier, the better.
Definitely the earlier. I mean, obviously, not even just the power of compounding. Like obviously, if you put $100 in Apple in the 90s instead of in the 2000s, it's worth more. But like I said, like even with my investing and trading, I think I mean, if you're going to actually be into it, like if you are going to actually like you want to be an investor, like a trader or something, actually be active in it, then it's like the knowledge is so important that you get. But if you just want to like be a kind of a fiscally responsible person and make investments, then like obviously just buying earlier is usually better. So I mean it works both ways for the knowledge and the power of compounding, I think.
Right. One other mistake I feel like young investors make is investing without research. So,
Yeah,
you just go in like, hey, I'm just going to buy this and without even knowing anything
it
about the
sounds cool.
company. And I'm not saying you have to know everything about the company because I invested things I really don't know about the company, but I look at the chart, you know what I'm saying? And I'm like, hey, this might be good. I do at least figure out in general what they do. But I know some people they get like real extensive in the research. Like they
I
want
mean,
to know, they want to
that's
read
what
like their what's up. Go ahead.
that's what I do for a living.
Yeah.
That's exactly what I do now. I literally do extensive research on I know my list of companies, and I mean it works both ways though, because like I remember they said they took a fund manager and then they took a cat, and the cat outperformed the fund manager. So I mean, like on one hand, stocks is still at the end of the day you can do as much research as you want, but you can't predict the future.
Right. Right.
But on the other hand, it's like if you do like actually take the time and go out and find some decent companies to invest in, then it's like that's always better. Like if you actually go out and do the front end research, like all right, maybe like you think AI is going to be big, so let me go research some AI companies, and let me go make sure I find some legitimate AI companies, not like some penny stocks. So I mean, like I definitely think that is something that's very important that most younger people don't want to take the time to do.
I like that you mentioned the penny stock thing because that's one thing that I had on my list, man. Young people
Yeah.
buying penny stocks. Now that's kind of a slippery slope because there's a lot of people making a lot of dough on penny
Yeah.
stocks, but that's because they've taken hits. They already know what they're getting into. I feel like younger people, if they buy penny stocks, they just feel like, hey, I bought 1,000 shares of this. I
Yeah.
can't wait for it to, go to $100 a share. You know what I'm saying? Like that's most likely not gonna happen.
See, and that's where real research comes too, because there's penny stocks that are illegitimate, like that like are like somebody's garage or something that they just went public somehow.
Right,
And
right,
there's penny stocks that are really just down on their luck and like they have legitimate operations and all that good stuff. Like MTBC, like it was a penny stock, by definition.
right,
Actually, it still is. It's under $5.
right,
But like if you do your research, it's a legitimate operation.
right. I
So
I guess I was talking about like real, like true
yeah, I know
penny
what you're
stocks,
saying,
like
like
over the counter. You
like
know what I'm saying?
yeah, like the 2 cent penny stocks.
Yeah,
Yeah.
you can't even you buy it, but you can't sell it. You know what
I
I'm
know.
saying?
I know, and it trades like 50 million shares a minute and stuff
Hey,
like that.
getting those J size stocks, man.
Uh,
Don't get
oh
into those
man.
J side. Don't get into the J side index, man. Don't do it.
I know. Oh man.
Also, man, I
Oh
was thinking that don't buy anything that someone tells you to buy, right?
yeah, that's I'm real big on ideas. Like you should, and if someone gives you an idea, there's nothing wrong with it. But at least go do some research first.
Right.
At least because like you told me about Teledoc, but like I just went and looked a little bit, and but I still ended up buying a stock, and it worked out really well.
Mhm.
So
Right,
so
yeah,
I
I'm,
mean,
I'm I'm not saying that wouldn't work, but you can't, let's just take our boy Jay Side for example. He was he was pumping his stock in our chat, right? you know, and obviously that wasn't a real, a real company, a real stock. That was like a true, that was a definition of a J side. You know what I'm saying?
Yeah.
So you don't want to just buy it just because somebody say, "Hey man, buy this." Even though
Yeah.
I've missed out on some good opportunities because people told me to buy something and I just wrote them off as, you don't know what you're talking about. Like I remember my dad.
Right.
I don't know if I told the story on this podcast or not. My dad, and man, I want to say it was 2008. He was like, "Hey, you should look into buying Cedar Fair because
Oh
this."
yeah, yeah. I remember you.
Yeah,
You was talking about that.
it was like, man, this dude at work, he's talking about Cedar Fair. You know, it was I think it was $8 a share, and I just dismissed it as, you don't know nothing about the stock market. You know what I'm saying? But now I don't have it in front of me, but I think it's
It's
like
like
60.
56.
Yeah,
It's in the mid 50s, I think. Yeah.
I'm like, man, I tell my
And the dividend is like 6%.
yeah.
So you would have been collecting that on the way there too. Like, yeah, it's a crazy nice dividend.
So man, and when I see my dad, sometimes I tell him, I'm like, man, I should have bought that Cedar Fair. Like, even if I would have put about $100 on it,
I
something
know.
just stupid low. Right by
Yeah.
now, I probably with the dividend, and I probably have over a G.
Yeah, for sure. I mean, like the one thing I like do, like especially because like at my job, everyone in there's most of the guys at my job are really into the stock market. So like if someone gives me an idea, and especially if the stock is like $5, $6, $7, a lot of times I'll literally just go and buy at least like one share in my Robinhood just to hold it. So it's like, all right, let me get a chance. Like at least I remember it. Let me get a chance if and go back into it because I mean I always assume that the guys I talk to do the research anyway.
Right,
So it's like at least I'm okay with spending $10 on a stock because who
right,
knows what could happen regardless. So, but like I won't like go deep into it just because someone tells me about it.
right, exactly. And that's what I try to do now too. So, some people in our chat, they mentioned something, and I mentioned on this podcast a bunch of times that someone had recommended Carvana in our
Oh
chat a while ago when it was like 22, and I was like, man, I buy this. I bought a bunch of shares at 22, and then look where it's at now. You know what I'm saying? That was only a matter of about 3 or 4 months, even though I thought that they were a little too high before earnings, and I sold it. I sold it at
oh
45,
yeah,
but now it then popped up to about 54 or wherever it's at now. So I'm kind of kicking myself, but I mean, you can't be mad at taking profit though. That was over
yeah, right.
100%.
Never be mad at a profit.
So
I, and I think like for another one I'll say, but it kind of depends on the person. But I think over trading, like I know this is basically a mistake I made was over trading, like just because you can't just trade every idea. Like you can't just look at every chart and make a trade on every idea. Then as soon as it doesn't work or does work, you sell and you go try another one. So I think one mistake I made was that, but at the same time, there are people, day traders churn their accounts over and over again. So
right,
like if you are good at it, I mean, I think it just depends. Like I wish, I guess basically the bottom line of that would be as a younger investor, you should allocate some money to long term and some money to short term trading. Like that's what mistake I made was I didn't allocate anything to long term trading. I did all, I mean, yeah, long term investing. I did all short term trading. I do some long terming now, but like if I would have did it, 5 years ago, I would have made a lot more money because like stocks like Netflix and Facebook, I traded. I didn't just buy and hold.
right, right,
I was trading them. So like, because I remember when Facebook went public, I was telling my brother, I think I was a sophomore in high school, so I didn't trade yet. I just looked at the market, and I was like, Facebook's at 17. This is too low. I was like, this stock is too low. There's no way this Facebook should be down here. And then now it's at 200.
right.
So like, but if I would have just bought it and held it, or like tried to buy it and hold it at that time, and like obviously I'd have made like 2,000%. But
Yeah.
but yeah, basically that's pretty much. I think that's one big one for younger people.
Yeah, I agree with you, man. I agree as far as over trading. Now, I agree, and I also agree with you that day traders, they turn their accounts over plenty of times per minute. You know what I'm saying?
Right.
But we're talking about younger, just getting started cats.
Exactly.
You don't want to do that, especially if you don't have something like a Robinhood where, fees are eating at your account.
Yeah.
over.
See, that's one thing too. I've been, especially because when I started, that's when before like everyone really started being really competitive. So, but I was using Trade King though, so it was only $5, but still,
Yeah,
like
still.
when you make 20 trades in a month, that's $100. When you only playing with like $1,000, that's 10. You lost 10% without even before you even got a capital gain or a loss. So like, yeah, that's one. I think that's one thing that you should really younger people should really look at when they're getting started. It's like managing that
that
basically.
that what you that one right there that you just brought up, man, the over trading, that probably should have been the first one we started off with.
Yeah, I mean, I think it's like I think it's probably like number two on my list. I still think the young, starting earlier is the most important,
Hmm.
something that you can't fix. But like, yeah, I think over trading can be pretty big. But like I said though, some people you might be successful at in and out trading. So like that's why I don't think it's the worst because some people it can be successful for some. Even beginner traders, some people are like just get it. They're just good at off the jump. So like they might be good at that
Right. Yeah.
for the most part, that's just that you're gonna get eaten up. So
Yeah. All right, man. Well, I hope people listening took our advice. I think they will because
yeah,
people know our track record, right? They
yeah,
know us.
yeah,
Shoot,
for
man,
sure.
what's up? Yeah, but but yo, um, you can follow me on Twitter, Instagram, anything at Camboni11, Camboni11. Also, hit us up to join our Marathon Money Facebook chat. Um, and like and subscribe to our YouTube channel. Leave us some comments on the podcast app in the Google Play Store and also on Apple. What's up, Jaron? Tell them where they can find you.
Only got a Facebook. You can just find me on
Oh man,
Facebook,
what's up with
Jaron
yo? You hating
Campbell.
on Twitter, man?
But I'm not hating on Twitter. I just can't get into multiple social media. I spend enough time on Facebook. Like I can't. I can't do it. Like I mean, but here's the thing though. I think people, you underestimate Twitter and Instagram is on my Facebook anyway. So I might as well be on Facebook and Instagram, Twitter and Instagram. I get it all on there anyway. So Facebook is the universe of social media. So that's the only thing I'm on. Just Jaron Campbell on Facebook.
Yeah, and they can also connect with you if they join our Marathon Money chat too.
Oh right, yeah, I'm in the chat almost every day. Yeah.
So, all right, man. I'm glad you came on. And I'm glad you I really like the over trading thing and the other points that you made up, man. So, thanks again, and until next week, peace.